Okay, welcome back everyone. So next we will share a little bit about the type of business loan. Basically the bank has a lot of products. Okay, just now I remember some of you have actually named the type of loan that you actually need, right? The equipment loan, what loan? Some of you got mentioned the type of loan, very good. Okay, so different banks, they offer different type of loan to cater the different purposes. Some is for equipment, some is for land, some is for machine, some is for what, working capital. Someone just now mentioned working capital, right? Very good. Okay, so each bank, they have their own product, but more or less the basic one, the basic few types, most of the banks do offer. Only a very special one, some banks do offer, some banks doesn't. So I will show you, I will introduce you some of the very common type of the business loan that help in business. The first one, overdraft. Does everyone hear about overdraft? Some people call it OD. This is very common and very easy to use for businessmen because it's just a sum of money put into your current account. The current account that you just now you open, that is the current account. For business, there's no saving account. Personal, we use saving account. For business, is a current account. Usually, current account doesn't give you deposit interest. It's different from personal. Personal, we receive interest from the bank, right? Because we put in money as a deposit. For business, even though you put in money, the bank doesn't give you interest. Okay, but when the bank gives you loan in overdraft, the money they will put in the current account, then the bank will charge you interest, not charge the business bank interest. The second one is term loan, followed by trade loan, equipment financing, or some people call it IHP. IHP is industrial hire purchase. Like our personal, we are using the car is hire purchase loan. For business, it's called industrial hire purchase. Followed by commercial property loan, like if you need to buy the shop house or factory, it's under commercial property loan. And then micro or SME loan, that is just for the particular type of business. Come with the green or ESG link loan. This is a very reason here. The bank do offer such package in order to support the business who actually do a lot of effort in ESG. Then the last one is supply chain financing. Supply chain financing, it could be the combination of one or two types of the loans together. Now I will show you the example later. Hello, welcome back. Okay, so for the interest of our group, instrument that you have already missed out just now, a very quick one. or 40 or 50 or indicator. When the business you can meet at least 60 or 70% of the indicator listed out by the bank, then you are entitled for the loan. And throughout the loan period, actually the bank will have a review annually to make sure that the business continue to do the ESG related effort to meet the certain percentage of the effort that required. And then the last is supply chain financing, which I will bring you through before we end our training session today. Okay, the first one, business overdraft. You see the definition here. It's a flexible revolving credit linked to current account. So current account is the one that just now we have some exercise or experience to do it online or using the form style of application. So after your application for the business current account being approved, you already have that account. So with that only you can get the overdraft, business overdraft loan from a bank, and the overdraft limit will be parked in your current account. Now for you to whenever you like just now we start up the business, right? So we need some money to buy anything or prepare anything, do some advertisement. Some people tell me they need marketing, they have some cost, they need to replenish their inventory, detergent. Who's the detergent one? No, you already said detergent one is right here. You have some replenish to the detergent, right? Yeah, so for whatever purpose, but not for makan-makan lah. Makan-makan don't use only lah. Okay, so this is for whatever business related purpose. You can withdraw the money from the bank. Okay, cover short-term cash flow, cash shortfalls. Then the advantage, interest charged only on the amount used. Okay, so like example, today for a small business, after the bank verify all the documents required, your business registration, the bank satisfied, they grant you the current account, and then from there you enhance the business and the banking relationship. You tell the bank officer you need more. So the bank again, they will ask you for some documentary proof that your business is running or not making any loss. Then the bank will after they satisfy with the verification, they will approve some limit, example 300,000, let's say. So the 300,000 is not your money, it's the bank's money that they put in your current account. Right? So you can use anytime, withdraw the money, issue check or online transfer anytime when the banks during the tenor, so long as the bank doesn't pull back the facility, the 300,000, you can use anytime. So what is this interest charge only on the amount used? Okay, so Anyone need help? Can follow? No, no. That's the base for the. There are few currency adopt the 360 as a base. I cannot recall because not commonly used, but US dollar is the commonly used. So far, I think about 3 or 4 currencies. Base is 360. Malaysia, ringgit, use 365. Yeah. So meaning here, the interest structure is daily rest on nice balance. The first is the daily about if we make after we make the advance payment, the fertilizer doesn't ship in Malaysia, or when the fertilizer comes, it is not fertilizer, it's not the things that you want, but your down payment already paid, right? So it's a risk to buyer as well. That's why people always use letter of credit when they do some international purchase. And for this, it's always catered for short term per transaction. It can be 30 days or up to maximum half year, 6 months. And the interest rate is considered low if we compare to other type of business loan. 4.5 only. The common one is for LC, trust receipt, real exchange, and many more. In Malaysia, we have EA, tender acceptance. Have you heard about that? Never lah. Then we have also invoice financing and many types of trade loan. So the calculation method is similar to this. Depends on how many days that you borrow. The only thing different is that this how many days that you need. It's not that anytime after you do your business, you think that your account has extra money, you want to do repayment. This is for OD only because the flexibility. For trade one, you have to fix the number of days upfront. It's either 30 days, the day one, when you do the trade loan, you have to fix already 30 days, 45 days. So when it comes to the due date, you make sure you make the repayment. The bank will calculate the interest according plus the principal based on the number of days. So for example, here if you buy 1 container of fertilizer, how much? 150,000 only. Let's say 4.5%, cheaper now compared to this 8%. So we times that. Times how many days? Let's say, I think 60 is more common or 90. 30 is too short for trade. Because after you buy the fertilizer, your jago belum tumbuh, cannot not yet harvest, you cannot sell your jago, so you no money to do the repayment yet. So we usually take 60 or 90 days, depending on you have to upfront count how many days that you can get the profit from the business there. Okay, this is profit loan. Okay, the next one is equipment financing. Okay, it can be a type of loan or lease. Lease to purchase. Lease to purchase meaning what? Meaning today you sign the IHB agreement, loan agreement with the bank. It doesn't mean that you own the equipment. The bank still has the ownership of the equipment. So it's leased. But by end of the period when you do the full repayment, the bank said now you can own the ownership of the machine. So the concept is just similar like our car loan. Correct? Car loan also is a hire purchase. When it's still serving the loan, the grant who demand. It's not based on like OD just now. OD, you don't know how many days you will use. So you don't know how much the interest that at the end the bank will charge. Right? This one already know. So it's like easy budgeting emotionally or digital. Okay, I have to do some exercise. Okay, here. Local manufacturer want to import a machine from Thailand for their production. First time building, the buyer don't know the seller from Thailand. The seller from Thailand also don't know the manufacturer from Malaysia. The machine value is 300,000. So what is the best payment method? That is not loan time. We don't touch about loan. Here is what is the payment method that suitable for this buy and sell. Rasa macam mana? Cash delivery. Supplier. As a buyer, we buy cash delivery. Ask the Thailand seller, you deliver come to my factory. I see the machine that I will pay you. Correct? How many of you agree with this? I think it's good for buyer lah. What about for supplier? Rugi tak if they deliver the machine come to your factory, then you see the machine is like, it's not matching to my model. I cannot apply this machine to my factory. I don't want to buy. You go back, you bring your machine back. Then the supplier will, does the supplier actually making any loss with this scenario? Loss in terms of what? Shipping. Yeah. Shipping fee, really clever. Okay. Anything else that the supplier lost? Yes, Doctor, you.
You want to do something very nice?
Can. Okay, so Dr. Yo will,
We do a role play, I need two Indonesian. Come. Okay. And then I need two Malaysian. You say you're Malaysian, right? Come. Malaysian up. Come, Malaysian, come. 1, 2, come. You don't want to be Malaysian already. Okay. Two. Okay. Now, you want to buy rubber from them. No. There. Oil. Okay, you oil rig, right? Okay. Now they sell oil rig. Okay. No. They sell oil. Okay. So you want to buy oil from them. Okay. You want to sell. Price okay already. You want to buy. You want to sell. Shop. Okay. Shop.
deliver first to my house, then I will pay. Deliver to your house. To
your shop. To your factory. deliver first or pay first? If pay first,
who think that the supplier should deliver first?
who think? Should pay first or should deliver first?
Or take some
Deliver first. Okay, now
Deliver
first, deliver. Okay. So now pass the money, right?
Yeah. Where's the money?
How?
Usually the concern from buyer is about the quality or the quantity. What if when they deliver, the quantity is not sufficient as per the agreed?
So, how? So okay, now,
Hey, can you pay?
pay.
Oh, the other side ring. It's not already. My grandma is also sick.
After you finish the paper, still in the week. Have to wait.
Macam mana? If pay first, macam mana? The one to deliver.
It's not the one. Not yet.
The grandmother is sick, cannot go and dig. So, how? Jadi or not? So, what happened to the money? Gone already, right? 50 million US dollars. So that's why we have this instrument we call LC, letter of credit.
Yes.
So now money pass to Miss Jia.
On the bank.
To the bank. Miss Jia is the bank. Okay? Money keep here first. Issue a letter of credit, pass to the supplier. The suppliers receive from the bank one. Okay, safe. Deliver. After deliver, money from the bank pay to them.
Yeah.
Letter of credit.
The money will be the letter from the buyer.
So the bank is acting like an agent. Understand? So that's letter of credit. Understand? Thank you very much.
Kalau macam ni still can issue the LC. Just now very clear, right? The buyer gives the money to the bank, then issue the letter of credit. Supplier after delivery, the bank will transfer the money from buyer to supplier. What if the buyer don't have the money immediately? Let's say the buyer will take the whole tank of the oil for what purpose? For production or for, let's say we say distribute to whatever Petron or what Amtex, right? Then you need about 3 months to collect back the money of 50 million from your business, right? Yeah. So from there, instead of from one product letter of credit, now we need second product. Just now we mentioned about trust receipt, right? The second part, trust receipt. Or some people in Malaysia we do BA, letter acceptance or invoice financing also cannot. Meaning when the letter of credit issued, you don't have the actual money with bank, but you can tell bank you can make the repayment of 50 million in, let's say, 90 days. because of quantity, how much, make sure how much you pay, or write down in the LC, deliver according to the quantity. So you can tell them you need 90 days. 90 days. Pay, do the repayment. So within the 90 days, make sure you go and sell and collect back the money. Of course, from your business, you can collect more than 50 million. It's not that you sell exactly 50 million from what you buy now. That's not business now. So with that, you can use the trade loan 4.5%. You take 90 days to pay the bank. So this is how business works. This is how the bank support business. Okay, 50 million is not cheap, no? Yeah. Understand now? Yeah, understand. Okay, the next one, property loan. Property loan is for what purpose? What you want to buy that you can apply for property loan.
To buy like a warehouse, basically land and setup.
Very smart. So the title of the loan, the type of the loan is already out. Is to support what type of purchase. Okay, is to purchase where the buy of office, warehouse, factory, shop lot. Now that is property. So it's a type of long-term loan. Property loan usually is about 15-20 years type of loan. So the rate is also BLR plus 2.8%. When you see is BLR plus 2.8%, meaning is floating. Now whenever BR change, your all-in rate, all-in interest rate will be changed. Now BR get cheaper, your all-in interest will be cheaper. But it doesn't change like every week or daily. The BR will change whenever according to the policy, the government policy, and the bank will fix the rate, this rate. Next one is micro or SME loan. So it's to support the small scale financing tailored for micro, small, medium enterprises. Like example, Pisang Goreng lah. Pisang Goreng consider micro one. But they want to do big work. They want to have franchise nationwide. Maybe at the beginning stage lah, it's consider micro. So it's more like for to support the startup capital, inventory purchase. They need a lot of the quality, inventory purchase, business development. Often support by government agency or development bank. So who is the bank that you know the government agency or development bank is referring to who? Who can tell me which bank in Malaysia is actually under this category? Is public bank under this category? Yes or no? Just now the thing is public bank considered under government agency or development banks that support SME loan? They bank. In Malaysia is we have what agro bank. Correct. About agro bank. this is quite applicable to the like students today, as they will be. Some of them is like very business minded, and they might actually start out a business.
Okay, let me ask you guys today, as a new businessman, you want to start a business, you walk into the bank, you go and find Miss Jia, I want to borrow money. I want to borrow money. You think Miss Jia will see you?
Yes.
The door is there. You see, when you want to start a business, when you want to borrow money, for any bank, you need to have at least 3 years of profitable record. You need to be profitable, right, Miss Jia? 3 years, right? And then you need to have also some collateral. You know what's collateral? If you run away, what can the bank get back? So, for example, your house, your car, okay? If you have a husband, you want to sell your husband to the bank also don't want, you know, okay? So, in this case, it's actually very difficult for us to start a business. You might be thinking, if I have so much money, I don't want to, why I want to borrow from the bank, right? Okay? But in reality, nobody, I tell you, nobody in Malaysia would tell you that the money is enough for them on. Oh, I have too much money, don't come anymore. Oh, I don't want the money anymore. Will anyone tell you like that? Oh, the money coming in to my account too fast. Stop, I cannot tahan. Oh, I cannot tahan. You will say that or not? So the money, the more the merrier, right? The better, right? So that's why you see, you look at the businessmen, they want money, whether they need it or not, they want the money. Okay, they would rather pay for the interest. But the problem is, not everyone can actually borrow money from the bank. Do you still remember that when we learned about the balance sheet? Where does the money come from and where does the money allocate? Remember now? Balance sheet, shareholder equity. Okay? Here, the loan. Here is the asset. Where does the money come from? The money comes from the shareholder, the money comes from the profit, or the money comes from the bank by loaning. And then where you spend the money on, you buy a car, you buy a shop house or whatever. Okay? So the bank loan is a very important source of money. That's why today we have Ms. Jia here. Okay? But the issue is borrowing from the bank is not easy. You need to understand what can the bank offers. Okay? So that's why Ms. Jia just now also shared about the letter of credit. Because borrowing money is not like every time you borrow, they give you a bag of money. Not like that one, you know. Okay? Sometimes when you want to get the money from the bank won't be necessarily paying to you, but maybe paying to your supplier. You want to buy from the supplier, right? So the bank afraid if I lend the money to you, you run away or not. So instead of giving the money to you, I pay to the supplier. Because the supplier is always there. They do oil rig business, 50 million business. Okay? I just pay 100,000 to them, they won't run away, but I pay 100,000 to you, you might run away. Correct or not? So there are many instruments. So in this case, if the commercial bank, like public bank, I tell you, you guys know public bank or not? The name is public only, it's actually not public, you know. It's private one, you know. Okay, you got the boss. The boss name what? Teh Hong Piao. Okay, Teh Hong Piao, the boss. Passed away already, right? Passed away already, lah. Okay, but still not public one, you know. His family owns it, you know. The name only public. Okay, so what about our small business, medium business? Where to get the money from? Like I said, you want to borrow from Miss Jia will kick you out. Today, as a special guest, she come and smile with you. If normally you go to the bank, you think she smile like that? Okay? So we go to something we call financial institution. Like for example, just now, Miss Jia shared Agrobank. So Agrobank is one of the very good example where they do only agro. the government asks them to fund agro businesses. Agro includes what? Plantation like oil palm, rubber plantation, rice plantation, poultry like chicken farming, fish. People don't do what? First of all, because the risk is too high. Aquaculture people don't do because bank don't lend, right? To aqua. Very minimal because it's too risky. Why? One fish kena disease, the whole batch die. The risk is too high, so they don't do. Chicken, okay. Duck maybe, cow, cattle maybe okay. So these are the specific bank. They are actually not bank, but we still call them a bank because their role is like a bank called financial institution. Okay, and there are also specific bank like SME bank. They loan to SME, small, medium enterprise. Okay, so the big companies cannot come in one. So that we have some room, we allocate some money for the SME, SMI. Okay, and there are what other financial institutions? I think that's all. So this type of special, that's also one very interesting one. You know, like I said, bank in the whole world also the same one. You know, they look nice, but actually, okay. So you want to borrow money, but actually, so what happened? You see, in Bangladesh, specific example in Bangladesh, there's one specific example where we also know that in Bangladesh people are also very poor, right? Okay, not trying to be biased or what, but we are just telling the truth for learning purposes, okay? Many poor people, but they want to find a work also. They don't have good work with high salary, right? Okay, so the only way out is actually to do what? Small business. But the thing is, you go to the bank smile at you and then show you the door, right? Like this here, okay? See, okay? So they come up with a concept, okay? This fellow who came up with this concept is actually a professor, okay? He's a professor, I think it's social, school of social, whatever, social science. So they came up with this concept where they only loan very small amount, a few thousand ringgit, maybe even a few hundred ringgit, to very tiny business they call micro business. This micro business is not very big business like what? Oil rig, like what else? Just now what are the business that you want to do? Agriculture, okay? But very small business like making chocolate cake. your favorite, right? I know your favorite, okay? Or burger stall. Small burger stall, very small. Burger stall, how much you need? Tell me. The store you can rent, right? The small store you can rent, right? Okay? Then, but you still need the money to buy what? The bread, the patty, the vegetable. Okay? Those are the sauce. Different sauce, cheese sauce, this sauce, that sauce, you know, Malaysian like chili sauce, like that, right? Okay? So, but the thing is, those people who want to do it, back in Bangladesh, here we still consider not so bad, you know. Ask you to buy a bottle of sauce, ask you to buy some bread, you still have the money to buy if you really want to do, right? Then people really may not have the money to start a business, you know. So these people, this group of people, including the professor, they go and gather some money from some rich people, okay? Definitely not professors, the rich people. You look at the page, rich or not? Not so, right? Okay? So they get some money from the government, lend it to the small business, the micro businesses, okay? Just a few thousand, and then every month they collect. Like, you know Along or not? Along, you know. Along, if you see, look at the shop, especially where, you know, mama store. Someone sitting there, look at the counter one, every day going to collect. That's Along, you know, actually. So they also collect every week or every month you collect a bit, okay? So that these people, but they are not that high, the interest is very low, okay? It's like bank, the interest is like bank. So That's why banks have to be very careful because the interest is very low. Okay? So 4%, 5%, they are usually 8%. Loan, credit card 18%. Okay, credit card 1.5% per month. Okay?
Over there, we count based on per annum,
Huh.
right? 365, credit card, is
Per month, 1.5% per month. Nominal 18%, but if compounded more than 20%. That's why I tell you guys, never borrow credit cards loan. Pay it back as soon as possible. Oh, it's just here, so we shouldn't say that.
bank loan business loan.
Bank loan business, is it? The bankers will always think from the bank side, you know. They are brainwashed already by the banks, you know. You pity like us. We normal people. Okay? Yeah. So they lend the money to all these micro businesses. So this is what we call micro credit. And the professor, his name is Professor Yusuf. The Professor Yusuf recently, a few years ago, just get this Nobel Prize because of this concept. Very good, he helped a lot of people. Actually, he helped by having this micro credit, you're actually helping a lot of makia, makcik, this and that, you know, the uncle, pakcik, do some business, generate some income. Okay, actually, it's a very good concept. Okay, so that's why today we are very lucky to have Ms. Jia here, okay, to share a bit on the good side of the bank. When she is not here, we can share a little bit more. Okay, Ms. Jia, thank you.
But I know that like the Professor Yusuf concept cannot be applied in Malaysia because Malaysia, you want to borrow money, usually is regulated by Bank Negara, license need to be granted for the institution whoever want to give borrow money, correct? So you don't simply borrow from the unauthorized person,
And don't become the unauthorized person to lend the money.
Okay. The next one is the ESG linked loan, or we call it green loan. Okay, what is this? When we talk about ESG, is this something very new for us? One is a very new word for us. This one is to support. Okay, it's support the effort of each company or factory to do their effort in terms of something that contribute to the environment. So first of all, we look at regulation, financing that towards business for meeting sustainability or environmental targets. Okay, who set the targets? When a factory or a business go to bank, when the business starts about talking about the ESG linked growth, they need to prove to the bank what are the efforts that they have been doing, what are the ESG related certificates that they have obtained, and then at the bank side they also have a set of indicators to judge whether this business has met at least the minimum requirement for the ESG indicator. Then after doing the analysis, evaluation, then only the bank will decide whether want to grant the green loan to the business to benefit lower interest rate for ESG compliance. What does it mean by lower interest rate? You see here, base rate plus 2.5 is the normal business loan, but for green ESG loan, it is minus 0.5. Okay, so it's considered is 0.5 a good offer for business. Very small or little for 0.5. Can you try to calculate this? We take 100 purchase. What if we compile for the 1-year purchase? It can be huge for business, especially you know who likes this? The palm oil trader. They want for every day the daily trading for palm oil, the big one, it can be up to 10 million for 1 day. So if we say they trade every day, right? So we can 30 times flat okay. The 0.5% for 1 million. How much they save for 1 year? For the palm oil trader, and that's for annualized times 30 days. Or we say 30 days, Saturday, Sunday, we don't count that. 1 year they save how much? 164,000. That's a huge saving for business. So for those who are doing big business, try to aim for ESG growth. Okay. And why does bank want to give the discount or subsidize? Because it's our global target towards sustainability environment. We cannot always think about earn money in business. We also want the sustainability. So that is why this type of practice is being offered. Okay, the last one, supply chain financing. Okay, supply chain financing is a type of support the payment from to pay supplier based on the availability or the strength the financial strength of the buyer. Okay. Over this type of financing, supply chain financing, how the business structure the loan, they can do it like just now, like example here, we say the buyer can pay in 60 days, right? Okay. What if the buyer say, actually I prefer to do the repayment in longer, let's say 120 days. So for this, when come to this type of requirement, the bank actually can choose it. The bank can say, okay, by 60 days, bank as a bank, I help you to pay the supplier, but for the balance of remaining 60 days, bank they give another type of business to the buyer, so that the bank can charge another set of interest based on the balance 60 days. Understand? I don't use the 90 days, that's so that you can see the difference. If the buyer say they need extra 30 days to do the repayment, so by day of on the reverse factoring, confirming, payable financing. These are the type of the terminology being used for the type of the loan type in business. And it is short term, 30 to 180, very similar to the trade financing that we discussed earlier. It's just that for this supply chain financing, the bank actually gives some extent either at the supplier side. For the supplier, okay, let's say for supplier side, how can you understand? Just now we say the supplier will get the money in 60 days, right? So if the supplier say, I want to get the money earlier by 30 days, so the bank can use the bank's money to pay the supplier in day 30th, okay, and the balance one, the bank will charge interest on the supplier in that case. So this is another way of financing. The interest is vary between 5% to 9%, usually is at the high side, up to 9%, depending on the tenor, and it can be buyer-centric or supplier-centric. What does it mean by buyer-centric? Just now, let's say the buyer is a very strong buyer. So the buyer may have a few small suppliers, which is not that strong. So the bank will base on the buyer's credit strength to judge how much they want to support the suppliers to let them receive the money earlier. So in that case, right, the bank will actually assess the financial strength of the buyer and charge some interest for early payment to the supplier, charge the interest on supplier.
Can role play or not role play?
Can.
Can
Can.
Okay.
Come.
Role play on. Yes. Role play a bit to show you what is buyer centric and what is supplier centric. Come role play, come. I need one more. Any volunteer? Any volunteers? Let me see. Don't want to look at me. Wow, everyone. Okay. Okay, role play. It's role play time. Okay. So, like Miss Jia shared just now, bank sometimes they want to lend you the money. They also afraid you run away or not. People give you 100,000, you run away or not? Of course not, 100,000. My father also got, right? Give you 1 million, run away or not? No. 10 million? 100 million? Yes. If you run away, then what happened to Miss Jia? So they want to lend you money, they also must make sure you don't run away, right? Okay? So now, let's imagine we are in this business. We grow chicken farming. Okay or not? Chicken farming. Okay? How you go smile? Okay, chicken farming. Okay? Who looks like the boss of KFC? Okay, thank you. Boss of KFC. Who looks like farmer? You want to volunteer? Volunteer. Farmer. Who looks like feet? You know chicken feet? The duck, chicken feet. Huh? Chicken feet, not chicken leg, no. Chicken feet, the duck. The duck. Who look like manufactured chicken feet? Okay, you come. So you make chicken feet. You can see. Boss, you can see. Okay, turn the chest here. Then you leg can put like that because you are the boss. Then you can shake like that. Okay. Then one more. Okay, wait. I'll move first. Okay, now. Farmers what does KFC sell? Fried chicken, right? Does he need chicken or not? Does he grow the chicken by himself or not? Well, then where can he get the chicken from? From supplier, right? Supplier, farmer, farm chicken, right? Got money or not? A bit lah. Wow, you have money. You want to borrow from bank or not? You want to supply to KFC? You want to supply 1 chicken or 2 chicken? Of course, you have that many money or not? Okay, then go to find Miss Jia, right? Go to find Miss Jia. You want to borrow 1 million. Miss Jia, want to borrow 1 million?
Can I borrow 1 million?
Can or not?
Okay, based on your annual turnover, your annual sales, 1 million is too much.
Cannot.
I will approve at maximum up to 300, also subject to HQ approval.
300,000 is graphical. Okay or not?
Yeah.
300,000, okay, right? Okay. So, habis lah Miss Jia, right? So you think, is Miss Jia safer to pay the money to the KFC or pay the money to the farmer? KFC, of course, right? So might as well I lend the money to KFC, but KFC don't need the money, right? Right or not? So in this case, the farmer need to buy the fish, or not?
Yes.
Need to buy the feed, right? So in this case, what they can do is, if the money give directly to farmer, farmer take and run away. Finish lah. Nobody's growing chicken. We all eat worm only lah. Okay? So now, if the farmer get the feed from the factory, okay, and then need to pay money, right? Feed, right? Need to pay money, right? Okay, and then now you become the banker. Agro bank, Miss Jia, bad bank, good bank here. Agro bank, agro bank, pay to the feed first. Okay or not? Okay, so now, but who take the money? You take the money, right? But who get the feed? You get the feed, right? Okay. After getting the feed, grow the chicken, sell it to KFC. Okay. But actually, the money she take already. Actually, you owe the bank, right? Correct or not? The bank pay to her, but actually the one who borrow the money is the farmer, correct or not? Okay. So in this case, the farmer, you know our people, right? You get a little bit of money, you get very excited, and then you want to spend money, right? 300,000 you want to spend, right? So in order to prevent that to happen, okay, the money suppose that the farmer received from KFC a lot of money, the bank will have first, okay, to recover the fee that she paid to here. So whatever left over, okay, let's say if just now you buy the feed 100,000, you sell the chicken 300,000, okay. So the bank will pay 100,000 here. Okay, you owe the bank 100,000, right? So this 300,000, out of the 300,000, 100,000 will be given to the bank, pay back the loan. Remaining 200,000, if so profitable, actually not so much, actually 10%. 200,000 given to the farmer. Net. So the bank no risk, because why? KFC won't run away. KFC will pay the bank. Understand? Okay. So that is also how the deal is structured. It may not be necessary that you buy the house, okay, then you owe the bank, and then every time you need to pay back. It depends. Business loan is very flexible and structured. Okay, so you have a lot of things to play with.
So people will think, what about if KFC doesn't make the payment to Agrobank, since the loan is not being signed between KFC and Agrobank,
In and the bank.
right?
Farmer and the bank.
Would you ever think about this? What if KFC doesn't pay to the bank and bank don't chance to play the role in pay here and balance come here, right? Actually, there's an agreement. If there's a structure loan or supply chain loan being offered, the bank will want KFC to upfront sign, say that for this is called assignment. So for all sales from this chicken farmer to KFC, he will issue an invoice. So on that invoice itself, it has to be printed. All proceeds have to come to Bank which account number, so the Bank has a chance to play the role of distributing the money to the correct one. So KFC has to follow whatever account that being stated in the invoice when there's a structured trade loan being offered.
So in this case, the farmer will have a bank account with Bank, and then whatever money come into Bank, by right paid to this first, the bank will pay first. So in this case, actually the banks is the risk of the bank is very low. So that's why we always say that the bank makes money. You think the bank makes money, a lot of money because of your saving a little bit, lend to the housing loan a little bit. They earn the money at the moment the money go into the bank. Whenever you move the money, they make a profit. Right? Yeah. Every single step, they are in the money business. Money face it up.
And that is another type of account already. It's not the current account. It is called designated collection account, DCA. Also, this DCA, just now you have the current account. Now, when you want to enter into this agreement, you have to open another second account under your company name, but it's not your current account. Because why it's not under your current account? Because if it is under his current account, whenever KFC pay 300, he can immediately withdraw the 300. Right? So it's a designated collection account where the owner name is him, but he doesn't have the authority to withdraw money. It's being controlled by that. And that is how the bank, being involved in this business structure.
Okay.
Support the business and the supply chain, the whole supply chain to be continue to run with the bank.
Thank you very much. Thank you everyone.
Thank you. Thank you, Dr. So this is the summary for the impact of those that we discussed. Can anyone tell me what is the best loan Based on each question, you rate up between 1 to 5. 5 is the strongly agree. 1 is the strongly disagree.
That's okay, don't worry. Okay, okay. Still good. You don't know it. You're out already. You're my kaput. You're so out. Look at better.
Okay, shall we continue? Everyone back already? Okay, so good. So I just want to touch a little bit about this supply chain financing, which we also touched a bit just now, the last time of the loan. Okay, it's a gift to buyer and suppliers. How can you say it's a gift? In fact, the bank charge interest, right? But you must remember, with the supply chain financing, the bank actually links between the payment and is the payment terms between the supplier to the buyer. So I'll show you a little bit about the introduction about this financing. Okay, supply chain financing, SCF is supply chain financing, is a set of technology-based solutions that aim to lower the financing costs and improve the business efficiency for buyers and sellers in the sales transaction. Why do we say that this is a lower financing cost? Okay, we say the interest financing cost can be lowered when the bank judge on the, like just now we said, strong buyer. When a strong buyer versus a small or not that strong borrower for bank, they will tend to offer a better or lower interest rate, borrowing interest rate to the strong party instead of the new setup or the smaller players in the market. Supply chain financing methodologies work by automating transaction and tracking invoice, approval and settlement process. Okay. When we come to supply chain financing, actually bank they have a platform to make the whole process more automated instead of the conventional type of business loan where more document or details information required. So after the bank do the one-time upfront due diligence check, once they approve the whole project for under this supply chain, they will actually onboard all the parties to a supply chain platform. So that's why it's called automating transaction. For conventional normal trade financing, just now we mentioned the borrower need to present invoice, transport document, which is bill of lading or delivery order, depend on what type of the delivery. If by lorry, inland, it is delivery order. If by ship, by vessel, by sea, it is bill of lading. And then we have the quality cert, the quantity cert, etc. Everything need to be provided. Some even ask for the custom declaration form. The bank needs all these things to prove that it is a genuine purchase. But when the bank understands the whole purchase and sales and purchase of this particular business, the bank doesn't need that much of document. Instead, under this platform, supply chain platform, the bank only need the buyer, which is the KFC, to upload the invoice of for each batch of the chicken that it purchased from that particular approved supplier. The very important word, approved supplier. Let's say KFC, they have three from KFC, from this particular approved supplier. Whatever goods or the chicken that supply come, the invoice come from this particular approved supplier. What KFC need to do, they will need to present all the